Good weekend, all. Ira Epstein of Linn Associates with your weekend edition of your financial market update. And this is for Friday, the 22nd of February, 2019, about 3:20 p.m. Central Standard Time. There's another 40 minutes of trading, but so what? Your settlement prices have been determined already in your stock indices, and this is where they did finish up. They'll reopen from when I'm recording, probably about while I'm just finishing up this recording, but then they'll trade on. Dollar, pretty stable. In fact, most currencies were pretty stable today. You really didn't go one way or the other. The interesting thing to me was that you were as strong as you were in the bonds and the notes, and I say that because what's putting the stock market up is more talk that, number one, there'll be another 2 days of negotiation that go on in Washington, D.C. The head negotiators out of China that are here, along with our head negotiators, are giving it a continued go. The president has not said yet if he'll extend, but he's already saying that the probability of a meeting at Mar-a-Lago at the end of March with Premier Xi of China is highly likely. So the market's taking this all to mean, yes, there's going to be a deal probably. Don't know what the terms are. They keep releasing different parts, like 1.2 or 3 trillion of buying of goods over the next years from China to the U.S. That's in addition to what they've been buying to close the trade gap. But they're being very, very difficult on the area of being able to verify what the Chinese say in terms of intellectual property. They're being very difficult in the sense of how do you stop forced technology transfers by U.S. companies? How do you open up certain financial areas where Visa cards, MasterCards, they all can get in there? There's still plenty to go, but it appears there's good progress going, and I guess that's the important thing. We're going to see that very shortly Mr. Mueller's report's going to come out on the president in Russia. We'll find out what's going on there. That could happen as early as next week from what we're hearing in the press. There's just a lot going on at this point. So let's get to it and see what we've got here. When you take a look at the monthly area chart of just closes of the S&P, look at how you've come up, and you have finally come up high enough where you've taken out that previous number. Now, admittedly, we are not at the close of a month just yet. This is measuring where you're at this level into it, and for this part of the month, we're up 87 points. It is the 22nd. We have until next Thursday or so, and that's when we'll get to the end of the month and see where we're at. When you look at a weekly area chart of closes, it's up and away. Since this market broke into the Christmas Eve time frame of 24.85.75 on a close, you're back to 27.91. Folks, that's a big rally. That's 300 points that this market has come up. You can see how it looks on the charts here on a weekly bar chart that uses the highs and lows. We are into a potential resistance zone here. The question, of course, for all of us is it a buy the rumor, sell the fact, or is this market capable of even going further if there is an extension of the trade deal? It's too soon to build in and factor in the signing of a deal at the end of March, but you can start factoring in and questioning the impact of an extension of that deal. As the market comes up on the swing lines, you can see you do have a pattern of higher lows and higher highs. That is bullish. The market is trading over the 18-week average of closes, and here's what's so important. Remember, this market had a trajectory where it was trying to come down and maybe what I call kiss this 100-week moving average of closes. With the current action, it's starting to turn away. So what you have is a classic bullish setup where the short-term average is over the 100, the 100 is over the 200. All the averages are still bullish, and that offers support on breaks back into the 18-week moving average and the 100-week average, 26.32 to 26.62. Doesn't mean where the market has to go. That's just a support area. Resistance is up here at the 28.50 level if the market wants to go to an upper Bollinger Band. That would obviously clear these paths of resistance that we saw in November. And if you did that, What the press would start talking about are new highs in the market. Yes, new all-time highs, because you'd have cleared that resistance, and that leaves you right at that point. 2850 would still be a number you'd have to get through any way that you go through it, and that's what we'll call, or I'll label, a natural resistance point. If you clear that, the Bollinger top. So, interesting parts there. Momentum still up. Momentum on a weekly chart, as I describe it, gets neither overbought or oversold. It's either bullish, going up, or sideways over 80. It is either pointing down. It can be bearish if it's going sideways under 80, but it's not overbought or oversold. So I still have that pointing higher. In the NASDAQ, it's the same type of picture. Higher lows, higher highs. You're approached and into this resistance that we had before the big break that happened in December. The resistance, if it can keep climbing up, is the 7250 level, and what a rally that has been. Still bullish. Dow Jones, different chart. You still have the lower highs and lower lows. This has been one of these vertical rallies where you haven't had a real setback. Take a look. You don't have one of these patterns here where you had a lower close on it. Just take a look at how this works. Look at all the green closes that you're getting. It's week after week after week. This is pretty unusual on a chart. This is a nightmare for those that are looking for a correction in the market. Just 1 week, 2 weeks, 3, 4, 5, 6, 7. What is this? 8 weeks in a row up. 2 months. Just straight on up on a weekly basis. When you take a look at the Russell, away you go. But unlike the Dow, you at least had a correction point. You've never had that correction point. You've got the higher lows, higher highs, and like the other markets, you're into that resistance back from this area with the Bollinger Band as the next upside target, while you keep the pressure on the VIX down. We had thought it might make a move, if you'll recall, these past few weeks towards that 100-week average. As momentum still pointing down, you're there. If the market breaks further with the stock indices moving higher, then I'll look for the 1120 area. But we're right at that zone that if I step over here, you're at the zone here where you're at the top of the 2018 trading range. We'll see if the market can start cutting into that or not. In the 10-year notes, you rallied back, and you have been fighting a battle right now at the 18-week. I'm sorry about that, the 100-week moving average of closes. Green is the 100, red is the 18. Haven't even broken the pattern of higher lows, but what it has done is made lower highs. So you're narrowing in like this in the market, not breaking out in a trend to the upside. If you can clear that 100-week, maybe you get to 123.12, and you realize the press would then be talking, you'd probably be under the 2.6 area in yield on the 10-year. In TLT, you've reestablished the uptrend. Here we had a pattern that was fighting. You had the lower highs, higher lows. Now it's extending itself, giving you the clearer pattern of higher lows, higher highs in the market. Momentum still bullish, bias still up in the chart. In the dollar index, you've pulled back to the 18-week moving average of closes. The trend is still bullish in the dollar. You still have the pattern of higher lows, higher highs. So on the weekly chart, you're caught in this sideways action. And out of this sideways action, what's going to happen is the next major move in the dollar. So keep your eyes on this. Is it to the upside or downside? The market's had an awful lot of trouble in the 97.40 area. We haven't really tried the downside for much, but there's no reason for me to think you are at this point. I'm just bringing it up because so many firms in December were talking the dollar's going to be down this year, and to date they haven't been right. In the eurocurrency, you still have a pattern of lower highs, lower lows. You did hit the lower Bollinger Band. You're bouncing. We know that there's problems of slowdown there. The question is if the European Central Bank can bring on enough tools to spur the economy on, does the market start looking positive on that? Or if they don't do anything, do you start breaking out to the downside on this, which would obviously be a bit bullish in the dollar? In the British pound, talk is that now we're getting just weeks away from that March 29th date, 5 weeks away. Word is that there'll be a delay in the Brexit. That is what the hope is in the market. Not that they've reached further deal or anything, but a delay. And I think that's what Ms. May has been working on all along. I mean, she'd love to get her deal through, but I don't think the MPs in the House of Commons are going to allow it at this point. You do have a pattern of higher lows. You've had the higher highs. Resistance is here. So far, the bulls have control of the market. You'd have to take out 127.91 to take control away from them. And if the market can run to the upside, the 13200 level's the next resistance. The Canadian dollar got back its mojo for the time being. It's got back the pattern of higher lows. It's got the higher highs, and it's back over the 18-week moving average of closes. That's all bullish in the market. Momentum up. Resistance comes in between 77.04 to 77.29. In the Japanese yen, this market is stalled against the 100-week moving average of closes, with the next support layer down at 90.18, which is the 18-week. If you closed under that, you might get a new leg to the downside, or at least fight at that general 18-week. What are you right now? I'm going to call this chart imbalance right here, trying to figure out what the next thing is. While the swing line's down, the bias is up because you're over the 18-week average, and momentum is pointing down. There's divergence all over the place. In Bitcoin on the weekly chart, notice how the momentum has turned up here. And with that, I would not be surprised that we make a challenge of the 18-week average of closes at 42.05. The market would have to not only take out this last break low that we had right here of 35.30, but it would have to what? Turn momentum back down, and it's not doing that. So you have momentum saying the market wants to go higher. I will call the market still without trend. And the reason is, while the swing line's up, the bias is down since you're under that 18-week average of closes. In the Brent versus WTI crude, you got up to a high, if you will, last week of 1068. You're getting a bit of a correction in that, whereas the WTI has, if you will, gained back a little bit against the Brent. When you come and you look at the Brent, this market has got higher lows, higher highs. Last week, what it did is the market fought, and it finished itself at the 66.25, which was over both the 18 and the 100-week average. And now what's happened is you got a funny pattern here. You have the 18-week under the 100, which is normally not what bull trends are made out of. That will have to whip around in the longer term. Should the market decide to just keep this run going, 75.35 could happen. And if it runs out of momentum, instead, it might pull back and fight the battle here as these averages try to figure out what next. Any move under right now, 59.48, would look very bad on this chart, whereas it would keep the 18-week moving average of closes under the 100 and take away the bull pattern in the market. When we get to WTI crude, you have the higher lows, the higher highs. Next resistance is the 58.28 level, which from here isn't too far away. It's about $1 away, and you can see where that's at. The Bollinger Bands are probably going to rush down at the market. They're too high and too low, and that's why they're almost going in these vertical moves. But the trend is up, the bias is up, momentum is up. This is still looking pretty good. In Rebob Gasoline, momentum is up, the bias is up, the trend is up. Formidable resistance starting to show, 175.18 to 177.24, which is the upper Bollinger Band and the 100-week moving average of closes. And when we come to nat gas, this market just laid down and died. It still hasn't come back alive. And the problem for this market is winter is coming to an end. I know for parts of America this weekend, you're going to think I'm crazy as these monster storms are headed out east, the northeast. It's going to be brutal. I get it. I realize Phoenix today was in the 30s. However, there is a however. You can't argue with dates, and you're at February 22nd. So, on rallies, I don't see the weather carrying the market going into March. Doing an awful lot one way or the other is the problem. Trend down, bias down, momentum down. This market can get a bounce, but not looking like it's more than that. You know, if you're like me, You get uncertainty about trades. I do. And if you think you don't, I go home, fight with myself. I'll be over my computer in the house and I put out my updates at night. But I'm forever trying to stay disciplined, doing what I can. If you think I don't have advisory services, you're wrong. I tell you all the time, I use seasonal charts. I have others. I don't want to mention them, but I use other services. I want their fundamentals. I want their technical analysis because these are guys I respect and I know they stay disciplined. And if you're like me, you'll question some of your trades. And what my goal is in the mornings, at 8:30 in the morning, is to present a series of 40 charts to you live. I record my computer, and these are how my charts look. I teach you and reinforce what these lines mean, and I will go through with you the chart action, what I think the pros are doing right now. Do I see day trades? Do I see a short-term swing trade? Do I see a longer trade coming out of this? And I can talk specific trade ideas. The way I do it, because I record it, each time I do these, I go through the charts in the same sequence. Stock indices first, then we're going to go to currencies, interest rates, metals. And that allows you, if you want, you can grab the recording on the bottom, move forward to just the markets that you might be interested in. So what's the purpose? The purpose is to act as a mentor. And if that's what you think you could use, a morning mentorship, this is what this video is all about. I make it really inexpensive for you to give it a try. $7.95 for the first 30 days, and no, it doesn't jump on you dramatically and get all through there. And yes, you can even buy a year's service for as little as $156 a year. So it's a deal. How do you get it? Well, you can call us. You can go to our website, and under the keywords, when you get there, research or education, go to morning subscriber video, click on it, and away you go. I'm Ira Epstein. You have yourselves a great weekend. I will see everybody come Monday. Take care till then.